Hey guys, so I'm going to put roughly 99% of my portfolio on just one single industry. That industry is artificial intelligence. Now, this does not mean that I'll make the pivot tomorrow. It might take me 1.5, 2 years to deploy all my capital or majority of my capital on AI-based stocks. But I'm already underway. I have already made this portfolio. You can see it has hit or crossed $1 million now. I started in January of 2025 and the returns have been quite good. So what this has led me to is that I have done deep research on this industry now. I am fairly comfortable buying stocks from this industry and I'm making my entire investing AI first. I'll help you understand the logic, but more importantly, I will touch upon the topic of retirement and passing on your portfolio to next generation. Why I feel that AI is the biggest thing out there, even from an investing lens. And if you do not make this major pivot, I'm not saying that follow me and put like almost all your capital on AI stocks. Don't do that. But if you have trust, then maybe 50%, 60% position, or if you're just starting out, maybe 10, 15% position, it has to be built on AI industry, right? So I'll back everything that I say with data, logic, and more importantly, many of you might be new. You would not understand the gravity of artificial intelligence, how big it is, what are some stocks that you could start tracking. So I'll break down this complex topic for you, right? So just a couple of requests. One is that if you do like the content, please subscribe to the channel. Majority of my viewers just watch it, note down the stock names, right, and start tracking it, but they don't follow the channel. So please subscribe to the channel so that follow-on videos you can see, you can make a note and keep following the journey along, right? I'm a DIY type of an investor. I do things myself. I share practical knowledge with you. I am an industry professional. I have certifications. So I'm one of the first influencers in India who got a finance influencer registration done in UAE. So I'm a registered financial influencer. I am professionally a hedge fund manager. So whatever I'm learning through my stock investing journey, I teach it to you, right? So let's begin the topic. And the first key point when it comes to retirement planning is what type of asset you should pick, right? Because even before going to stocks or picking certain types of industry, you need to even think that, what, boss, is there even a point in buying stocks? Because these days, for example, gold is giving crazy run up, right? So many people are very excited because of you just buy gold and you are done, right? So you don't need to touch anything because gold is going to preserve our wealth. So what's the way to check it? Well, here is the data, right? And I will just show you on a long frame. Long frame means that we are looking at data from 1990, right? So you can see this from the chart. This pink line is the stock or S&P 500 line, right? And this candlestick red and green line, this is the gold line. So you'll see that gold has given roughly 800% returns, right? From 1990 up until now. But stocks or S&P 500, which is the broad US stock market, this has given roughly 2100% returns. So 700 or 800 returns here and 2100 returns here. So long story short, history tells us that stocks perform typically better compared to gold on a long frame basis. Now this kind of makes more sense because see, in the long frame, because if you're thinking about that, hey, I'm like 30 years old, I need to dip into my retirement in 60. So you have 30 years left. Some of you might be thinking intergenerational, that hey, I'm going to build a portfolio, pass it on to my kids. So that time frame becomes maybe like 60 years, right? Now here, the good news is that you have a lot of time. 30 years is a lot of time. 60 years is a lot of time. And if you're starting the planning for this portfolio today, then you need to invest in high growth instrument. This is one key rule of portfolio planning. You go and invest in like, whatever Ladli Behn Yojana, whatever it is, or like a Sukanya Samriddhi Yojana, you'll make like 8% returns in INR. 6% is, or 5 or 6% is our official inflation. And 3% is your return. I'm assuming zero taxation. So you are making just 3% net, that too on the officially stated inflation. It does not make any sense, right? From a retirement planning perspective. Now, if you go and speak with like, whatever, like portfolio planners or whoever they are, bhai, pehli baat, first and foremost thing, they are just going to keep you in India, right? According to them, India is the, heaven and there's like nothing else. All your investment should go in India only, and they will not even guide you in terms of helping you understand options outside India. I'm not saying India is bad. India is great, but you need to have a hedge. This is the most important point, and you can't be investing in slow moving instruments. So cut all the debt. It does not make sense. This is my personal philosophy in terms of designing a portfolio. If you are someone with basic discretionary income, you don't need very high exposure to debt. Emergency funds keep like little bit of money, maybe like 6 months of your expenses, and be done. Beyond that, you don't need to invest in slow moving instruments. So slow moving instruments are your FDs, your bonds, even gold on a long frame. This is the most important word, long frame, right? That 30 years, 60 years, a long frame. So you have to go to equities. Which brings me to point number 2, that if you are going to equities, what type of equity should you pick? Because many people are getting pissed off that, hey, Akshat, you are going to like the US market, you are investing a lot of money there. Why not like India market? See guys, I will be putting in a lot of money in the India market when India market becomes cheap. I've been saying it for the last 1 year. In fact, 7 months back, I moved a lot of my money into US stocks and extremely happy. This portfolio beats 99% of mutual funds in India. Not kidding. Compare the returns, okay? And everything has been built in front of people, in front of my students. In case you are someone who is looking to learn how to pick the right type of US stocks, how to pick global equities, high growth, high reward stocks, these type of functionalities if you want, then I do run this portfolio. You can do it yourself. You have to pay 0 commissions on it. So this saves serious amount of money if you are putting decent amount of wealth. So if your portfolio is more than 10-15 lakhs, then joining this community will make a lot of sense, right? So I'm putting the links in description and comment box. You can check it out. But more to point to that, hey, if you're picking, let's say US equity or India equity, it's not a question of US equity or India equity. It's more of a question of which sectors can grow fast. Now, what is the meaning of fast growth? Now, according to me, anything which is above 15% in US dollar terms or 18% in INR terms is growing. Anything, any sector, any industry, it's growing at this rate because INR depreciates to US dollar by 3 to 4%. So therefore, this baseline return of 15% or 18% in INR terms, this is considered to be fast growth. Now, the problem in majority of the Indian stocks are that right now they are not tech driven, right? For example, if I were just to throw you a challenge that, hey, figure out like 5 good tech companies in India and assign industry to it, one of the industries would be IT, but the growth of IT industry is like 8 to 9%. Okay, so this is not fast growth industry. It's a value growth now because the stocks have gone down dramatically. So it's good for swing, but it's not as if that you can buy like IT stocks and plan on retiring on them, right? So this is my perspective. I hope I'm able to help you build that logic that fast growth industry means that the industry itself is growing at more than 15% USD terms. So which is that industry which is growing at 15% plus? So now if I throw that question at you and ask you to comment, I'll start getting comments like that, you know what boss, okay, semiconductor is growing really fast, data center is growing really fast, artificial intelligence is growing really fast. But we do a hodgepodge, we do a khichdi of all this because we don't understand the AI space. Which brings me to the next point that, hey, how do you start thinking about the AI space from an investing point of view? So let me break it down for you in very easy to understand terms, right? Even if you're a beginner, you will get this, right? So AI can be divided like this. So the first part or this horizontal part is called as horizontal or foundational AI, right? These would be things like chips, right? So you have NVIDIA, TSMC, these type of companies, they are called as chip makers. This will be horizontal. Horizontal means that around this horizontal line, other segments or vertical segments are built. For example, if you consider something like humanoids. Now, humanoids means human-like robots. Now, what are robots made of? Well, it's a combination of chips, right? For example, NVIDIA will build some chips. Then you will have software. Now, the software might be built by Microsoft. Then you will have computer vision, right? So the robot will have to go and look somewhere, right? So that technology is called as computer vision. Now, some other company might be making that. There is a company called as SoundHound, right? SoundHound, right? So this is again a vertical play, right? In AI, what it does is that basically it allows voice recognition in a more structural manner, in a faster way. For example, many of you might be using Alexa. सिर पीट लेते हो आप एलेक्सा को बोल बोल के कि भाई गाना बदल दे, राइट? गाना बदल दे, बट द एलेक्सा डज नॉट अंडरस्टैंड. दैट्स वेरी बैड स्पीच रिकग्निशन. नाउ व्हेन यू आर रनिंग लाइक रोबोट्स एंड इफ यू आर टेलिंग सम कॉम्प्लिकेटेड टास्क टू द रोबोट दैट कि भाई go and clean utensils. So if you are telling that to the robot, then the robot should be able to grasp it quickly and execute the task. So all these are called as vertical plays. So AI can be broadly divided into two. One is called as horizontal or foundational. For example, chips are there. You have LLMs or language learning models. These are all horizontal AI. Vertical would be something like, let's say, wearables, or you have humanoids, or you have autonomous vehicles. And all this can be categorized into vertical plays. So this is the broader diversification from an investing lens of AI. Now then comes the next question that, okay, fine, great. I understand AI. Now, what type of companies should I pick? So I will recommend 6 key segments within the AI domain that you can start tracking today. So when it comes to chips, now chips industry or data processing, basically the problem that this chips industry is solving, it's solving for processing speed, right? Now processing speed means that, for example, it's the advancement in like personal computing, right? So for example, if you consider a modern day laptop, it has enough computing power that a very high quality computer used to have like in 1995, which was kept in like, some government research facility doing very secret work, right? But now your laptop or your mobile phone has much more compute power. Now this compute power or processing speed is critical, right, when it comes to the second type of stocks that you might be picking, which are called as LLMs. So you would have heard of companies like Perplexity or Llama or Grok, right? So all these are LLMs or language learning models. So let me help you understand both these things because these are symbiotic in relationship. So for example, these companies, NVIDIA, AMD, TSMC, now these companies have an interplay, right? Even for example, TSMC gives you like fabrication machine, right, on which chips are built, right? So you have AMD and NVIDIA, which manufacture chips given on the machines by ASML, and the foundry is done by TSMC, right? So it's a little bit complicated. You don't need to get into the nitty-gritties of it. But long story short, you can consider these 4 companies to be the bedrock of the chip industry. So this is what is happening in the chip industry. Now, at what rate or speed is the chip industry growing? Well, it's very difficult to estimate at which the chip industry will grow, or semiconductor jisko bola jata hai, that industry will grow. But the estimate suggests anywhere above 20%. This has been the growth rate. Now, one key example that I'll give you here is the story of NVIDIA. So for example, if you consider NVIDIA stock here, in the last 6 years, it has gone on to become a 50-60 times stock. I'm not talking about 5 or 6, I'm talking 60 times stock, okay? This is absolutely crazy. Just look at the stock price. Natural question comes that, you know what, boss, this is overheated because 60 times in 6 years, this is madness. But there was a very good question that was asked to Mr. Jensen Huang, who is the CEO of NVIDIA. And basically, the question was that, you know what, boss, like that you guys are on H200 chips and all these different companies, Microsoft, Facebook or Meta or Google, right? All these companies are ordering these chips from you, right? This year, let's say the year is 2024. And next year, you are selling them something called as Blackwell chips. And again, these companies are spending so much money buying these newer versions for you. Next year or the year after that, you will sell them like some XYZ newer chip. And again, these guys will have to go and make capital expenditure to buy these new chips from you. So it's like you buying a new car every year, right? So till what point will this game continue? And this is a very legitimate question because the major buyer of chips are which companies? Well, this is the category 3 companies. So these are called as foundational AI distributors, right? So all these companies, be it Microsoft, Facebook, Google, what will they do? They have massive distribution, right? And they will commercialize the application of whatever is being built here and here, right? So let me just complete the story. So he was asked that, okay, you guys have been selling H200 chips. Next year you start selling these Blackwell chips. The year after that you will be selling XYZ chips. Why will these guys keep on buying from you and paying you like billions and billions of dollars almost every single year? Well, the answer is that it's self-sustaining. Now, why is it self-sustaining? For example, if the processing speed for these companies or the compute power increases by 10%, you're theoretically bringing the cost that these companies incur in terms of processing the data by 10%. So this is self-sufficient, right? So whatever money is being paid to NVIDIA, NVIDIA picks that up, throws it into the research and generates better quality chips, sell it back to them. It further increases the compute power and it brings cost efficiency. So basically, in a way, one could argue that all these companies, Microsoft, Facebook, Google, are buying hardware for free, okay, in a way, because the compute power goes up. So these companies' productivity goes up, their software productivity goes up, be it Azure, AWS, whatever it is. So as a result, whatever additional capital expenditure they are making in terms of buying more of this processing speed, it kind of gets offset. I hope I'm able to explain this concept. And this is the reason why people are so excited about this chips industry. Do I have all 4 of these companies in my portfolio? Yes. I bought it at very good levels. My entire community bought it. Very, very happy. In fact, on something like AMD, right? You can check here. I'm on more than 60-65% returns, right? In the last 4 months. And I will be buying more of TSMC with time, right? So this is something which is on my radar, right? I haven't bought much of it, but AMD, Nvidia, ASML, they are doing okay. Right now, ASML is at a good position. Please remember that these companies you are unlikely to get cheap. So these are buy on dips companies. You should buy them at whenever you get a chance, right? So this is one. Second key category that I would touch upon very quickly is LLMs. Now, for example, you would have heard of a company called as Perplexity. So this was built by an Indian, right? He moved to the US, he built Perplexity. It's gaining a lot of traction. They were in talks to be acquired by Apple. So Apple threw some money at them or whatever, right? So very interesting, right? I mean, these guys are gaining a lot of traction on the ground. Grok came in, and Grok is owned by, in a way, Elon Musk, right? So he talks a lot about X. Entire X or Twitter is powered by Grok now, right? So if you want to fact check anything, for example, किसी ने बोल दिया we are going to become $50 trillion GDP, you have to fact check it. Just go to Grok and say, hey Grok, can you please check this statement or verify this? Whatever I'm posting on Twitter, ask that, hey, Grok, can you please verify what Akshat is saying? So you will get a note below that, right? So this is LLM, right? And this is again your foundational AI or horizontal AI. This is going to be very important. One key example I can give you is that of Perplexity. So for example, there is a very big investor in the US, right? I mean, he pitched in with the suggestion to Perplexity that, these days we have like Bloomberg, right? Now, Bloomberg is a trading terminal or a data repository for investors. It gives high quality information or access to proprietary research. For example, if you're a stock investor or if you're a hedge fund, then you will get institutional level research. Now, getting access to this institutional level research via LLMs has become really inexpensive now. So for example, I had a slightly bigger team on my hedge fund, but I'm not hiring anymore. The reason is that I'm anyways getting like high quality institutional research really cheap using the LLMs. My existing team can efficiently use it. So we don't need to expand the workforce really fast, right? So that's the scenario there. So this Perplexity, people are saying that, it can become the next Bloomberg, right? It can actually be much more efficient than Bloomberg, and that creates a use case for Perplexity. So you'll have an LLM, and that LLM would have like a subscription model. For example, Perplexity is an LLM and it will have a subscription model. It already has, but it can start a new service, which is like financial research. And there it can give you more high quality data. So again, you can go and invest in companies like Perplexity. Most of these are private right now. For example, if you want to buy Perplexity, then you need to buy Perplexity in the unlisted market. Will I buy it? Maybe, maybe not. I'll announce it in my community whenever I'm doing it. When the valuations become cheap, I will like to build more positions. But right now, I don't have much positions here because majority of these companies are in the unlisted space, be it OpenAI or be it Perplexity, be it Grok. So you can't individually buy them. That's a challenge. So you can't really invest here. The third key segment of AI was distribution-based AI. And these are the companies that are leading the race, right? So for example, if you consider Amazon, Apple, Microsoft, Facebook, Google, you need to start thinking about consumer AI, right? So, and when it comes to all these distribution-based companies, they can really push up the consumer AI bit. For example, one key change which is happening in the industry right now, in the hardware industry right now, is wearables. For example, the story started with Fitbit, right? So you would wear all that, that weird looking watch on your wrist. It will track your health. It will track like, your sleeping pattern. It will track like 100 different things about your health and give you like some data around it. That was very preliminary stage of wearables, right? Now, next stage, what will happen here is that people might stop using apps altogether because using apps is a hassle. You download it, and then you need to book your cab. So you'll open up Uber, then you have to fill the destination and all that. One way this can be replaced entirely, or it is in the pipeline of being replaced, to be honest, is very simple. That right now what is happening is that you have a smart watch or whatever smart gadget. It's made by Apple or Microsoft or Google, I don't know. It's there on your wrist. You just tell your watch that, hey, Siri or whatever, please book the cheapest cab for me from Mumbai to Goa, right? And you will get, the cab will come, and that would be the cheapest thing that they could do, right? So there is already companies which are working on these technology. You have Google, which has a sub company called as Waymo, right? It is already building autonomous cars. Tesla, for example, it has built something called as Gigafactory, and this is what Gigafactories look like. Not just going to make like Tesla cars there, they are going to make humanoids or human-like robots, which is the next commercial application. Now, the issue so far was that all these innovations, we were thinking that they are very far ahead. Maybe it will take 20 years, 25 years. But honestly, like people are predicting that all this will become reality in certain parts of the world in the next 5 to 10 years. So therefore, you need to start looking at all these industries early. We are still in the early stages. If you find such companies in India, go ahead, put your money, right? It's decent to put money in these type of segments because the segment is growing really, really fast. So I wanted to talk a little bit more about cybersecurity stocks. I think they are again phenomenal because all this AI that is being built, it needs to be protected, and cybersecurity firms are going to play a pivotal role in that. So I wanted to touch upon that, but unfortunately I'm out of time, so I'll make that on part 2. I also wanted to touch upon humanoid. So a lot of interesting work is happening when it comes to humanoid. A lot of companies are doing medical tech, right, via humanoids, and a lot of commercial tech via humanoids. So these are 2 segments that I'll touch upon on part 2 of this video. But I hope you enjoyed it. You got the core that if you're planning your retirement portfolio, it's very important for you to pick high growth industries. And right now, AI is the #1 bet. And this is the reason why I'm migrating majority of my portfolio there. This does not mean that I'll not invest in India. I will invest in India only when the markets get cheap. And again, I'll come up with a video. I'll explain you guys. Thank you so much for watching, and I'll see you soon.